Good morning, traders. Chris Buss here with Traders Profit Compass with another morning look at markets for Thursday, October 7th. Getting a nice little bump in the tape this morning as sentiment lifts. I guess Putin is making noise over in Europe that he's willing and ready to help them with their natural gas. We've got the Republicans lending the Democrats an olive branch on getting this debt ceiling limit bumped up for at least a couple of months into early December. So a few macro catalysts out there. Looking at the futures, ES is up about 0.7, NASDAQ 1%. Small caps are lagging, only up 0.5%. I think the Putin comments are whacking oil down 1.5% and nat gas down about 3%. On the macro front, data released this morning. We've got initial jobless claims at 8:30, and then of course nat gas inventories at 10:30. So let's take a look at what happened yesterday and see if we can figure out what might happen today. Going back to the VIX, we're still in this big range between 20 and 25, although now with yesterday's rally, this has come down to 21. What you should do is keep an eye on this. If they can knock it down below 20 today, and at least get that downward trajectory going, that would be bullish equities. So even if you don't want to watch it intraday, what you could do is set yourself an alarm right there at 20, and when you if that goes off, then you're below 20, and I'm not going to say good to go, but it sure would be a move in the right direction to get this down below 20 and heading south. SPY Daily. I was looking at this note I made the other day, and really nothing has changed except yesterday we did recapture the declining 8 EMA. You can see it here in pink. So now today we are trading pre-market. We're trading right at like 437.90, and you can see that the 50 EMA comes in at 438.40. So it's declined a little bit. As we this price action below is going to bend your EMAs. So I think recapturing the 50 and holding it today would be a nice accomplishment for the bulls, and that would certainly open the door towards a gap fill up here, and then recapturing this 442.50 level. That would be a real good sign. So I would be keying off of the 50 as an important level, and you can see it more clearly here. The gold EMA is the 50, so you can use that 436 as your pivot, and knowing that we're going to open like up around $2 up in this 437.90, 438 area. And then remember, then we'll have a gap below, just like we had a gap above yesterday on the move lower in the pre-market. And now we're going to have the opposite. We're going to have an opening gap below, which oftentimes, remember, they slam it down to fill the gap and then they reverse it back up. We're ready for that move. So if let's just think about a scenario, and I'll lay that one out for you in a little bit of detail. price in the pre-market. I would be surprised, unless there's some big monumental thing on jobless claims. If it's way over or way under, that may have an effect on it. But let's just say price opens at 438 and you got the gap below. If you don't have a position and you get that pull in to 436, that would be down here to 435. That's where the gap's going to start, right? 435 up to 438. If you got a backfill into 435 that holds, that would be a nice place to get long with a stop just below. Or you can wait for it to recapture 436, which is a big line we've been using, and then you can get long from there. But whenever you got an opening gap, either above or below, and then they run price to fill it, that's always a very objective place to either go long or short, depending on which side of price gap was set up, on the open. So keep that in your playbook for a potential gap higher, backfill, and then reverse. So here it is on the 30-minute chart, and you can just see the gap levels and where we were at. It's 438 will be the 50. So got some very distinct levels there that we can work from. Moving on to the Qs, had some nice moves higher in the FATMAAN names, and we're going to look at those. But suffice it to say, on the Qs, we need to see this 360 taken out and then held on any kind of back test. You can see that right here at the gap, you've got the convergence of the 20 and 50 day EMAs aligned with the lower part of the gap at the gap opening at 365. That's going to be a big level, because you've got like a triple convergence. You've got the 20 coming in, the 50 coming in, and gap resistance coming in. So that would be a nice accomplishment for the bulls if they can take that out and fill this gap and then kind of get on the right side of the chart. That would be a nice productive day for the Qs. And here you can see it on the blow up. You've got this main level here at 360, and then you've got a lot of intermediate levels until you get to the gap. And just remember, when you've got a resistance level on a longer time frame, that level becomes even more important. So and what I mean by that is, we just looked at the daily and saw the 20 and 50 EMAs coming in right at the bottom of this gap. If you know that's there from the daily chart, that makes this level even more important and possibly harder to make that entry, because you've got that stiff overhead resistance on the daily chart. Here it is on the 30-minute. We opened down yesterday and popped up, and then had a nice rally into the close right up to 360. And remember, that was a sticking point over here and back here, so that'll be a test. IWM, like I said yesterday in the note, I've been very disappointed with it. I kind of thought with a rising rate environment it would do better. But by the same token, it didn't drop as much as SPY or QQQ. So from that standpoint, I mean, we're right here at the 50, right now. So we've got the leftover gap from yesterday. And then, depending on where it opens today, we'll have to put that gap in there as well. But if you're not in it, and I'm not in it now, but I will be on a recapture of the 50 right down here at 221.60 is where the 50 is at. You can let it go up to 222. That's fine. Just remember there's going to be a gap below that'll need to get filled at some point. And here it is on the 30. We had the gap down yesterday, spent a lot of time at that 217 level, and then finally worked its way up, but did not close that opening gap. So just a quick reminder, if you're new here, I certainly appreciate you spending some time on the channel, checking out the levels that I point out. Please hit the subscribe button and the alarm bell. That way you'll get notified of all my YouTube content. And then if you're interested, jump over in the show notes. You'll find a link to the blog page to register, and it takes 10 seconds to drop in your email. That way you'll get all my content right to your email box, and you'll have a convenient place to find whatever I have to say. Hopefully it'll impact your trading in a positive way. So I'm glad you're here. And of course, longtime listeners, thank you so much for supporting the channel. I really appreciate it. Pass that link along to your Facebook trading groups or family and friends, whoever you might think could benefit from the work. And guys, thank you so much also for retweeting my content. That helps a lot. So thank you. Okay, let's look at Facebook. We know it's been in the news. Was not able to close the gap from the other day, and you can see here got some work overhead to do, but came off the floor yesterday, came right up. You've got the gap entry at 335, and then hopefully see an up move from there. Notice here at this 339 level where I've got this line coming across, that's going to be pretty stiff resistance. Why? Because over here you can see all the touches at that level being support, and then once you're below that level, of course, it becomes resistance. So if you get long on the gap entry, don't get surprised or frustrated if price hesitates right here at this level, because there is going to be some overhead resistance there. Everybody that was long here were trapped on the gap down. So that means they may be motivated sellers like, oh my God, I dodged a bullet. Now price is back to where I bought it, so I'll get out. That's overhead supply, and that'll stop price from advancing for a while as long as those people are motivated to sell. Now, moving on to Apple, came down nicely for this double bottom and had a nice follow through the rest of the day. I think your overhead resistance here is going to be at 143, and then you can see the gaps above that need to be filled. And if you want, you can go over to the daily chart and kind of see where we're at. I thought we would go down to touch the 200. We can just look at that real quick. I thought we were going to come down here into this level, and we still, we still may do that. But that was a nice level to recover here. This 141 level was a nice kickback. But notice we got the 8 EMA right here. And then up at 144, we've got the declining 20 and the declining 50 to deal with. So 144 is going to be the hard place on the chart to get through, I would imagine. But once it does, I think the path will become much easier. Tesla, I mean, we've certainly got the right levels. I mean, bouncing in between here. So, I mean, as far as I can see, 780 is your pivot. And then I would be long on any breakout above 790. And if for some reason it loses 770, then, you know, you got to exit your longs, I would think. If you were long somewhere in this box hoping for a breakout and then you lose 770, depending on whatever time frame that you're working, I would expect it to come back to 760. So, but the posture of Tesla is certainly bullish. Why? Well, we were in an uptrend and now we're flagging, but the broader market sell-off really didn't hit this very bad, and we've held this flag area, which is bullish. So as long as it's within it, I think it's bullish. The only thing that would change my mind is coming back here, losing 770, and then losing 760, coming back in this box. So Tesla looks good. Microsoft has had a nice run off of this low, kind of a 2-day run, if you will, where price got a big lift, came up here to the gap, and then yesterday, of course, gapped back down and then moved higher. So I think the key level today is 294.50. If it can get above that, then I would say Microsoft is at least on the right side of the chart, on the right half of the trading, because you can see that this was support, all the support in here, all the support here. So now that's resistance, more or less halfway of the whole range. So if it breaks above 294.50, I think that's going to be hugely positive. And I would say it would have a good chance to come up here and fill this gap. So if you're not in it, just set your alarm at 294.50 and be ready to roll when and if it breaks above that level. And so this morning, if there's any kind of a sell-off back to 289, I think you can buy it there as well. And just, have a little back test of this breakout and then go on higher. Amazon, I looked in the pre-market and it's trading right around 3290, 3300, something like that. That'll, of course, leave this gap below, which I've already drawn in. I think if and when price recaptures the 200 from below and holds it, that is about as objective as it gets to get long. Look below the 200, bounce back above, that's going to be bullish. So then you'll have a very tight line to shoot against on the long side. You can just say to yourself, as long as it holds at 200, I'm good to go. and treat it that way. And then you can look up towards 33.40, and then the gap up here towards 33.70, and then 34.10, etc., all the way on up the line. But I would be keying off the 200 today. And then don't forget, this is the scenario that we just talked about. Opens with a gap up. They make a quick down move to fill it. Come back here to wherever we closed yesterday, 32.62. Then the gap will be filled, and then you could get long there and come back up, or just wait for the 200 to be recaptured, and then you'll be good to go. So that's how I would trade Amazon. Google, back up to the 50. So it's farther along than some of the others. So anything above 27.50, I think you can be long, and then look for this gap to fill, and for Google to more or less negate all this selling once it recaptures and fills this gap. It will have reversed a bunch of this bearishness. This was the Evergrande gap here. And so if once we get back to that level, it will have erased 2 weeks worth of corrective activity. So that would be positive. And remember, I just wanted to make a point. Remember, there was a $50 gap down here. And that just goes to show you or illustrate the point that we had a big down move that went down to fill that $50 gap. But then at the bottom of the gap, it stopped on a dime. And then, you can see this candle came down. The next candle came down to the exact same level, and then recaptured this 26.30 level. So you had two really big candles head into the bottom of that gap. And so in your mind, you should be thinking to yourself, we just closed a big gap. They've bought it back both times to this 26.30 level where the gap was. That's a very objective place to get long, right? Now, that doesn't mean you knew all this stuff was going to happen, but if you can get a really tight, nice, tight trade location to try along, good things will happen more often than not. So if you come back and get stopped out, you got your paper cut. But if you're at the bottom of the gap and that was the complete move, then you're in a great position to hold your ground, because as soon as you break this candle, you're going to be positive, and then you're in position to ride out a nice bounce if you get it, because there were no places once this happened that would have scared you out of your position, right? We go up to resistance, we come back, we go back up to resistance. There's nothing monumentally scary about that. Now you're in a little uptrend, and now you've got the overhead gap as your next target. So always look towards bottoms of gaps as objective levels to get long. And Netflix has been the star of the show, not affected by any of the selling. Broke out from 615. We talked about that the other day. Then it started forming this nice flag. Closed strong right at 640. And remember, going back from the daily chart, our measured move target is 650 to 660. But here's the deal. Looking at the daily chart, we were in a range. I mean, this big trading range goes back over a year at this point. And so now, even though we've got a $90 measured move that would take us up to 660, what you often see is after a year's worth of consolidation, you get a lot more than the measured move. So this may just be the beginning of a move like up to in the 700s or something like that. So be open to those possibilities. And if you if you bought the breakout or you bought the back test, then you're in great shape. Even if you bought at 615, you're in great shape. So today and in going forward, if and when price comes back to 615 for the breakout back test, I think you got to be a buyer there. I think any kind of back test of a breakout that holds is about as objective as it gets. And knowing that during this run, the selling did not even phase it, I think that bodes well for price. So let's see what happens, and I expect Netflix to go higher. And then lastly, we've got semiconductors. It didn't really. I mean, it bounced, but it really didn't do a whole lot. So now we've got the gap above that has yet to be filled, and then I think the big level, as it has been for months and months, this 258 would be a breakout from the big trading range. And then 262 was a secondary breakout level that we had, where we had a couple instances where price broke out of this 258, came up here, and then fell back. So I would regard that as an important level as well. So reclaiming 258 is going to be job one, and then breaking back above 262 is going to be the next big level. But I mean, if this recent bout of selling, if that's it, then I would expect semiconductors to participate at some point and make the move that I just talked about. So let's watch jobless claims this morning. See if there's some kind of big outsized move. I want to continue to watch energy. See if they sell it off some more or it stabilizes at a certain level. I think it's going higher longer term, but as a trader, you've got to be active and see what's going on. But just from a macro standpoint, I think energy's going to go higher. I'm going to be watching IWM closely and see if I can make any sense of a rising rate environment and it not really participating. So let's watch it today. Remember, I want to tell you, don't forget, tomorrow is the big jobless claims or not the employment report, the jobs report from September is tomorrow. And that's going to happen pre-market. So, that has the potential to move the market in a significant way. So as you go into the close this afternoon, just keep that in mind, right? As being out there for tomorrow as it relates to possibly impacting whatever positions you carry overnight. You won't have a chance to adjust them before that print tomorrow. So keep that in mind. I'm not trying to scare anybody. Just, when there's a big data release, if everybody likes it, it's going to gap up. If it's a nothing burger, then that's what it is too. But there's always that possibility that for some reason that data point disappoints and then they sell it off. So that is somewhat of a risk tomorrow. How big? I have no idea. So let's see if we can get this bounce to keep going today and see if bulls can take back control of the tape. So this has been Chris Buss with Traders Profit Compass. Hope you guys have a good day of trading and talk to you next time.